Morning everyone, this is Market Fatafat right here on ET Now. I'm Avan Dabaj. This is the show where we get you a comprehensive wrap of all the stocks to watch out for in trade. It promises to be a jam-packed half hour, so stay tuned. Well, the index is looking a tad tempered at this juncture. The Sensex is up about 45 points while we're looking at 10,800 on the screen. It's flat with a negative bias for the broader end of the market. But let's get the countdown going. A whole host of stocks that we'll be discussing. There's Mubina joining in. We also have Kunal Bothra and Jay Thakkar as well as Siddharth Bhamre. Well, let's get the countdown going. And Mubina, talk about the latest developments on ICICI Bank.
Well, it's something that's caused the stock price to plummet just as soon as the news was released, and this is with respect to the ongoing investigations against Chanda Kochhar. SEBI, CBI, all of them have been investigating certain transactions. Now, CBI has registered the FIR against Chanda Kochhar. Raids are in fact being conducted by the CBI at 4 locations in Mumbai and also the Videocon headquarters in Mumbai and Aurangabad as well. So this is something that has sent jitters up the spine of the stock price of ICICI Bank.
All right, watch out for that stock in trade. It's taking a knock at 363. Moving right on then, it's Sobha that's in active in trade today. In fact, Kunal, the entire real estate basket. So why is it that Sobha stands out?
Absolutely. I think Sobha is, rising up on the back of some strong volumes, and not just today. But I think the chunk of it happened in the last 1 week, and it's, seeing a follow-through momentum in terms of price. So, there was this big price up move, end of last week when the stock rallied from 460 to 500 plus. The volume shot up significantly, and post that, it's been on a stronger footing, consolidating on the back of some increasing volumes. I believe those are very strong signs that the stock is now ready to start a strong positional uptrend, which is why I've highlighted Sobha as a buy, targets of 550 and stop loss 490.
All right, that's the take coming in at 510 on Sobha. Let's shift gears then and go straight to aviation, and Interglobe Aviation sure is hogging the limelight. Well, it's not been a disappointing set of numbers, which is a positive. The Q4 capacity addition guidance has been fairly strong. Revenues have come in higher by 28%, but the profitability has been impacted by the high fuel prices, which has been up nearly 69%, as well as the adverse movement in Forex. They've added 19 aircraft in the quarter, and the management has said that they've grown their fleet 1 aircraft a week, and they see a capacity addition of about 34%. Brokerages as well across the board are reacting to the numbers of Interglobe. Cities, you do have brokerages like JP Morgan. They maintain an underweight on the stock with a target at 940, saying that the capacity ramp up will remain strong. Credit Suisse has a neutral rating with a target price at 1,075. Well, let's shift gears then and talk about the Nifty IT index. And in trade today, neither here nor there. But Jay, let's understand what the long-term outlook is for the IT pack.
Sure, definitely. First of all, good morning to you, Avan. Now, as far as Nifty IT index is concerned, I would say that is one which is really outperforming the other two major indices like Nifty and the Bank Nifty, which have been falling since couple of trading sessions, whereas Nifty IT has been clearly seeing a high tops, high bottom formation, a clear positive move on the upside. In fact, I would say, Avan, the index has also clearly provided a breakout from a downward sloping channel with a clear buy crossover in its weekly as well as daily momentum indicators. I think Nifty IT is really heading towards the short-term target of 15,600. One should remain buy here with a stop loss of 14,590.
Watch out for that stock, that index, the Nifty IT index in trade. It's a buy recommendation from Jay. Moving on then, Mubina, let's talk about Bharti Infratel as well, and that's a result candidate. What is the numbers and the quarter been like?
It's not been that bad a set of numbers, especially if you have to pitch it against what the expectations were. The numbers were really not that bad. Just to pull up what the company delivered versus what the poll was. First up, we had a revenue degrowth of almost about 0.7%, but expectations was 3,400 crore rupees. The company delivered 3,641 crore rupees. Even on the margin front, we were expecting a compression to 40.4%, but instead the company was flat when it came to margin, so it was not bad. Profits as well were higher by 8%, whereas we were expecting a degrowth. So like I said, not such a bad set of numbers. Brokerages, however, still are a bit circumspect. Co-locations and tenancy ratios, according to them, were stable. Even the gross additions had been picking up. But Citi has a neutral stance with a target at 310, and the stock price as well is down.
All right, keep an eye out on Bharti Infratel. Clearly, the stock seems to be taking quite a knock, despite the fact that Mubina says it wasn't that bad a quarter. Meantime, let's move on to that and chat about Equitas. It's quite steady in today's trading session. What exactly are the observations on the derivative side?
One, these financial names, mid-cap financial names like Ujjivan, Equitas, they are doing really well in today's trading session. Equitas is adding long positions. Also, if you look at volumes in cash market, they're already at 1 week high in first 2.5 hours of trade. And as I mentioned, there is formation of long position. Watch out for the level of 124, 125, which has been acting as a hurdle. If that resistance goes, and all likelihood it might, the way volumes and positioning is shaping up. So watch out for Equitas.
All right, that's certainly a stock to keep on the radar. Let's move right on then, and Kunal, chat about another stock which is exhibiting quite an adverse trend in trade today. From 33.04, the stock has moved down in today's session to the 3100 levels, and that is HEG. It was a stock which saw a very hard and fast rally at one point in time. Do you reckon that this sort of a downslide is here to stay and this would be lucrative for investors to start dipping in? What's your call?
No, I think traders should, or rather investors should refrain from buying at current levels. But the clear reason is because in the last 4-5 days, where we've seen the falling getting more aggravated for HEG and its pure graphite as well. It's been on higher volumes, and such kind of high volume selling generally indicates that there is some large institutions which are trying to maybe book out profits, and generally when that happens, the stock trend, not just in the near term but even on a medium term basis, drags lower, which is why I've highlighted HEG. Graphite is also similar case in point. These stocks could see further correction from current levels. Wouldn't be surprised that HEG could probably come back to even at 2700, 2800 levels over the next couple of weeks and months.
All right, that's the take. More downside on the cards for HEG, 5% down in today's trading session. We have to take a quick detour and talk about Raymond as well. It's been a robust Q3 set of numbers. Sanjay Bal is the CFO of Raymond, who now joins in on the show to talk a little bit about the quarter gone by. Profits have grown a healthy 30% at 40 crore rupees. The top line growth has come in at 1675, while the margins have expanded very comfortably to 9.2%. And that's largely been driven by volume growth in the domestic business. Even the branded apparel segment has held out at 20% sales growth. Garmenting has seen sales grow as well. Stock, though, under pressure. Sanjay Bal, the CFO, is here to give us more insight about the quarter as well as the road ahead. Thank you so much for taking time out. Now, let's start off with your margins. Given how they have shaped up, do you target a healthy double-digit growth on the margin front? And which segments do you think will drive your margins?
As we look into the future, clearly we see margin improvements continuing into quarter 4 as well. So we are looking at least 100 basis points improvement in our margins in quarter 4. We see challenges coming in by way of wool price as well as cotton prices, which continue to rule firm. However, given the portfolio, the mix of products that we have between very high value and the mid-range products, we believe that we should be able to offset these cost push that we will get. Also, we have taken a price increase in around 4% in our branded textiles business, which is also going to help us to manage costs and to keep our realizations intact.
All right, that's the take coming in on the overall quarter gone by. But I want to also talk about then your branded apparel segment that's done quite well. Would you attribute it to festive season flowing into Q3 this time? And which sub-segment or which channels have seen higher traction?
So the quarter started on a rather subdued note in October, but picked up with the onset of Diwali and in December as well, with the marriage season coming up in quarter 4. So there was a lot of traction that we saw in November and December. Also, the onset of the end of season sales in December also further helped in revenue growth. What is very encouraging to see is that our EBOs registered a very strong growth. MBO channels saw growth which were around 20%. The same-store sales growth was positive in this quarter at 8% across our EBOs. Our brands did extremely well. The Park Avenue registered a growth of 20%. Parks has been consistently doing very well, saw a growth of 17%. Color Plus was in high single digits. So across all brands, we saw secondary sales happening as well as consumer optics improving. The other extended categories that we have launched recently are showing great promise. The ethnic range continues to scale up.
I just want to understand what has been the outlook on your same-store sales growth as well. What has led to the jump in margins?
We've been able to maintain the margins, I would say. Last year, this quarter, the margins were low. We are hoping to increase the margins gradually over the next few quarters. Our target is to reach to double-digit EBITDA margins over the next couple of years. And over the next 4 to 5 quarters, we should be scaling these margins up. It is as a result of really all the initiatives that we are taking in the brands and in the product categories and in the full wardrobe solutions that we are offering to consumers. Also, as we scale up, we get cost synergies as well. So all our overhead costs as a percentage of sales comes down, and this should reflect in better margins. Also, the advertising and the promotion costs that we have, we've been investing heavily in the branded apparel space.
Mr. Pal, now can you tell us about your retail expansion plans? I understand you're looking at the omni-channel route. What has been the growth in the e-commerce platform?
So omni-channel is the way forward for us. We've investing a lot in digital interfaces. With our channel, with our CRM program, with consumers, a lot of initiatives are being rolled out to ensure that we leverage the physical stores that we have to ensure that we are able to deliver stocks to our consumers if they order online through any channel. And that is the capability that we believe that we can build to our advantage. Having a presence now of 1,363 stores and presence in over 500 cities and towns. So we will clearly be in a position to leverage that. There's a lot of investment in digital technologies that is happening currently. One example of that is a DIY, do it yourself, design it yourself. Initiatives that we have for consumers who walk into a Park Avenue store. They can design their own stores, and there is digital technology which is helping them, and the back end which we have.
Now, given the fact that, Mr. Bal, we've seen annual cotton that has hit a 9-year low, how has that impacted your business? Do you think that this will affect your growth going into the coming quarters as well?
Well, we have a very wide portfolio. So yes, cotton prices, as I mentioned earlier, also is ruling firm. Our one part of our portfolio in a branded apparel segment and also our shirting business is dependent on cotton. So there will be cost increases which will happen. We will have to plan for adequate measures to be taken, and partly through price increases as well to offset this. We don't see growth being impacted. One, because of the brand pull that we have. The other is the large channel presence that we have. It penetrates deep into the country, over 500 cities, as I mentioned earlier. So from the consumer demand side, we expect that to remain strong. We will have to manage and balance out the cost increases that will come with our portfolio of products to maintain our margins.
And Mr. Bahel, you received the project registration from the Maharashtra RERA for your real estate project in the 3rd quarter. The street is now keenly awaiting further details. Can you give us more color on your plans for real estate?
So, well, we've got good news to share on that. The much awaited approvals that we were seeking have come in now. So we've gone ahead and registered the phase 1 of the project, which essentially consists of launch of 2 high-rise towers of 42 floors each, of 2 BHK apartments in 2 sizes of one which is 50 square meters and the second which is around 60 square meters. So these are going to be part of phase 1 of our launch. Also, we will, with the registration now in place, we will now be looking at a commercial launch soon as well.
Sure. Right, Mr. Bal, we'll let you go on that note. Thank you so much for joining in and giving us more color on the growth plans, your same-store sales growth, as well as real estate. That's the stock price of Raymond at 797. Well, as we take a quick break right here on the show, as per the new tariff order, we want to remind our viewers that you now have the power to choose the channels that you want to watch. So if you want to keep watching Market Fatafat on ET Now, call your cable or DTH operator and get the Times, movies and news pack now. Welcome back. This is Market Fatafat. Let's get straight back to the stocks that you should watch out for in trade. Well, TTK Prestige, Jay, you have a buy call here?
Absolutely, you know, the kind of movement we have seen, an uptick seen in TTK Prestige is clearly a breakout from a small consolidation, and I think, you know, this is likely to inch towards the levels of 8800 now. The indicators are also absolutely positive and the stock is trading well above short-term moving averages. The short-term target will be 8800. On the lower side, the reversal is pegged at 7500.
All right, that's the take coming in, target 8800. Muthoot Finance, meantime, Kunal, let's understand what exactly are the levels to watch out for.
So it's a stock which is in a very steady and gradual uptrend. If you look at it over the last 2 or 3 months, I think from 380, 400 levels, the stock has just about gradually moved up to 540, 545. And even at current levels, there are some swing breakouts which are happening. The averages of or the slope of the averages, 50 and 200 moving averages, they started to increase in intensity, and that generally happens when you see a stock which is ready for yet another breakout on the upside. So Muthoot Finance is a hold in that regards. Targets of 570 plus. Stop loss could be till to 530.
All right, that's the take coming in based on technicals. Meantime, Piramal Enterprises, that's a stock that's looking a tad tempered in today's trading session. Jay, let's understand what is the right level to nibble into the stock.
You see, Aman, Piramal has been trading within a sideways consolidation, and we have been seeing that on the upside 2410 is clearly acting as a very stiff resistance for Piramal. I think that till 2410 levels aren't taken off on the upside, one shouldn't buy a Piramal Enterprise. In fact, it has a probability that till those levels aren't taken off, it can first flight till the levels of 2200 on the lower side. If 2200 level breaks, then the consolidation will see a breakdown. Then thereafter we can see 2000 levels as well. So I see a risk in Piramal till 2410 is not taken off.
All right, that's the word coming in terms of important levels on Piramal Enterprises. Tata Elxsi, meantime, that's a stock in the red today. What exactly, Siddharth, is happening with respect to the price and volume action today?
Firstly, stock is all set to close at 52 on a closing basis at 52-week low, Aman, and we are seeing huge correction in price backed by strong volumes and also formation of short positions. Important support has been breached, so watch out for further downside here.
Downside on the cards for Tata Elxsi. Well, on that note, we'll wrap it up then right here on Market Fatafat. Thanks so much for watching. The next edition coming up at 1:30. We've got Markets at Noon up next.